Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the giant US economy is slowing. It hasn't had 3 consecutive lackluster quarters in at least a decade, certainly not since the GFC. It has now. US jobless claims fell last week, but by less than seasonal factors would have suggested. There are now 1.85 million people on these benefits, less than last year at this time, but only marginally less than 2 years ago. US PCE inflation fell in June to 3.7% from 4% in May, as analysts had expected. But that is way higher than the Fed used to say it would tolerate. Personal disposable income rose less than personal spending, and for a 5th consecutive month. Meanwhile, their second quarter 2026 GDP update sagged in its first estimate, now up 1.5% and lower than the first quarter reading of 2% growth. Analysts had expected the second quarter to come in at 2.1%, so this data is a disappointment. It does mean, though, that the Fed rate hike is probably off the table, so equity markets rose. But so did long-term bond yields, although there was a notable pullback in short-term yields, so their rate curves steepened sharply. The US dollar also took a tumble and is now down 1.6% in just the past 2 days. And as expected, China's top leadership pledged to roll out targeted stimulus measures to support their economy in the second half of the year. The directives, issued at a Politburo meeting yesterday, came as the world's second largest economy faces weak domestic demand and deepening structural imbalances. Second quarter growth has been lower than they need to reach their targets. In Japan, observers see a Bank of Japan market intervention to support the yen. The yen rose sharply to 157 yen against the US dollar at one point yesterday, its strongest level since mid-May. And staying in Japan, consumer sentiment picked up in July, but that is off a lowish base, and it is barely back to its 2023-2024 levels. Sentiment surveys in the EU were out too for July, and they rose again to extend their streak for both consumers and business sentiment. EU GDP results for the second quarter of 2026 were also released overnight, rising to 1.2% from a year ago. For them, that is quite positive. In Germany, CPI inflation rose to 2.8% in July, up from 2.3% in June, which was below what they had in prior months, so more back at trend. The Bank of England reviewed their monetary policy overnight but made no changes. In Australia, in a briefing released on the ASX, banking major NAB noted that their total Australian home lending applications were 15% lower than in the prior quarter. And staying in Australia, they reported that the number of new dwellings consented rose 7% in June from May to 18,300. Houses were up only 0.4%, but other dwellings were up almost 18% from May, although that doesn't quite take them back to the year-ago levels despite this recent surge. And yesterday, Ampol, the owner of Z Energy here, reported sharply increased margins. Clearly, refiners have been adding much more to retail prices than just the higher cost of crude. And global air travel fell in June, not by a lot, but essentially driven by sharp retreats in Middle East travel. Also unusual is a fall-off in both domestic and international travel in North America, an unexpected shift. Domestic air travel in China was also unusually weak. Container freight rates fell again last week, down 3%, but they remain 70% higher than year-ago levels. Bulk cargo rates also fell marginally to be 24% lower than year-ago levels. And the US Treasury 10-year yield is now just on 4.67%, up 2 basis points from this time yesterday. The 30-year yield is nearly at a 20-year high. The key 2-10 yield curve is now at 44 basis points, up 13 basis points. Their 1-5 curve is now at 36 basis points, up 8. And their 3-month 10-year curve is at 100 basis points, up 6. There's been a sharp steepening of the US rate curve today, a harsh market verdict on the wash performance yesterday. The price of gold has risen to $4,105 an ounce, up $30 from yesterday. Silver is now just under $59 an ounce, up 50 cents from yesterday. And oil prices have dipped 50 cents from yesterday to be just under $84 a barrel in the US, while the international Brent price is now just over $89 a barrel and down $1.50. And the Kiwi dollar is up 100 basis points from yesterday at just under 58.8 US cents and suddenly back to early June levels. Against the Aussie, we're up 40 basis points at 83.3 Australian cents. Against the euro, we've risen 30 basis points at 51 euro cents. That all means our trade weighted index starts today at 62.5, which is up 80 basis points from yesterday. And the Bitcoin price starts today at $64,802 and up 1.4% from yesterday. Volatility of the past 24 hours has been modest, also at just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.